Welcome back. You're watching Buy Now, Sell Now on ET Now, and time for a viewer queries. And we have our experts Kunal Bothra as well as Rajesh Agarwal with us today. Let me take this first query that's come in from Soumitra, and this one is for you, Rajesh. He wants a view on Bandhan Bank. He wants to know whether are these levels good to enter this particular counter. Also, if there's any signs of recovery coming in for Bandhan Bank. How does this counter look, Rajesh? Well poised. If someone wants to enter, does it make sense to look at Bandhan Bank?
For the very short term, I would say there are a lot of headwinds being witnessed, but for a longer term horizon, I think it's a highly undervalued bank with more than 4,000 banking outlets, out of which thousands are 1,000 are the number of branches and 3,000 plus DSCs. The bank has been doing well, and IAMs are great. The only issue is from the recoveries in Assam, where the government has announced something to help them bail out. So if the things go well, I think it's a highly undervalued bank. Even if after such kind of run-up, it's still trading at around 50%. Discount rates all-time high. So I think if somebody wants to take an exposure of maybe 12 to 18 months, this is a very good bank to be in. But in the short term, yes, there are pains left into the bank. So what I would suggest is buy in a staggered way, and maybe 10 to 12% downside from these current market price would be a very good entry point.
All right, gentlemen, I do want to point out that we've got a lot of queries, and just a request to keep your answers short. I'm not saying don't give your rationale. Please do, but as concise as possible. We've got the next one from a senior citizen, and in fact, we've got quite a few of you tuning in. I'm so glad that we're able to help all of our senior citizens. This is Mr. Ahuja, who's written in, and he points out that we haven't taken his question in a while, and we should take it as a mission to take it right now, and we are doing that. NMDC is the counter, Kunal. He's bought at levels of 150. He's actually wondering whether to switch out to a real estate company. We just discussed that real estate could be a good trading opportunity. Is that something that you think that he should consider?
So I think it's going to be difficult, frankly, to answer this, because both these sectors, commodity linked, sectors like NMDC as well as real estate, both of these, sectors have shown classical breakouts. So, metal stocks, commodity themes, they've already shown those breakouts 6-8 months back, and you've seen the stocks rallying up higher. For example, NMDC was a stock which was at 100, 120 when the stock had confirmed a breakout of its multi-month time frame charts, and post that it moved up to 200, now come back to 150 levels. So and real estate stocks are the ones where the breakout is just very, very recent, where you've seen these stocks breaking out. So I think it's going to be difficult to try and make a switch. I would suggest that hold on to NMDC and probably park some fresh money if you can into the real estate stocks. But remember that both these sectors are very high beta, and you have to have a longest term time frame for getting very strong returns into both of these names.
This one is from Azma Khan, and she wants to make a fresh entry in Zenza Tech at current levels. Does it make sense, or is there any other good stock in the IT sector with reasonable valuation that Azma can look at? What's your take, Kunal? Zenza Tech, does it make sense for her to enter, or any other IT stock that you think it makes sense for Azma to look at?
I think we are at a point, Cheryl, that all the IT stocks are looking quite attractive. So difficult to choose just one or two of them. But I would still sense that you can have a mix of large caps and mid caps. Now, assuming if you just have one stock in your portfolio in terms of IT pack, then I would suggest that have a bifurcation where you look to diversify more IT names. I think the likes of Wipro, for example, have been very bullish on the stock. I think that stock looks very attractive to me on the charts. A recent breakout move which was seen 2-3 months back was Tech Mahindra, when the stock broke out of that 1100 mark. That could be an addition towards large cap names, and I think something like Mindtree as well could be held on to it from a longer term view. So I think it's better to try and diversify, and rather than just sticking to one large cap or one mid cap IT name, you should have a mix of both large caps and mid caps on the IT side.
All right, Balan's got a question for you, and this one's for you, Rajesh. L&T and Mindtree are the two counters that he holds. I do not know at what price, but he's wondering whether it would be a more tactical bet to shift to something like a Happiest Minds or a Stuffcraft.
See, I think one should continue with L&T because things are doing well. But as far as Mindtree is going concerned, company is doing well, but the valuations are a little stretched. A little bit of profit would be a prudent approach. And one can switch to mid-cap names like Persistent Systems or a Tech Mahindra or a Wipro, as Kunal was just pointing out. That would be a better strategy.
Okay, this one is from Kunal Kaushik. He wants to know which is the best realty stock to enter in current market price. We did speak about the realty sector in detail, Kunal, a while back, but I will take your question to Kunal Bothra and I'll ask him if there is any realty sector, realty stock that he would advise Kunal to look at. Kunal?
See, I think again here, as I said, when I was giving the chart patterns for real estate index, is that you have to have a bifurcation of two different set of stocks within the realty pack. So there are two stocks, for example, like Oberoi Realty and Godrej Properties, which are typically very moderate beta kind of stocks. These are not the stocks which go through high periods of volatility, but then they tend to go through more stronger and sturdier periods of uptrend. So you can consider buying maybe one of the two or both of these stocks, depending on the capital size which you're plan to deploy into the real estate pack, and something from the high beta pocket within the real estate pack, and something which is pure mid cap. I think you can look at Kolte Patil. The stock just recently broke out the 300 mark. It's completing a big inverse head and shoulder pattern, so looks very attractive from a longish term time scale. Prestige Estates, Indiabulls Real Estate. These are few names which you can consider specifically from a longer term play.
Just coming back to you, Kunal, on a strategy that you can follow with Reliance Industries. If I understand Lakshmi's question correctly, she bought a call with a strike of 2,470, and this is in anticipation of the launch of the phone, which she thinks would boost the price significantly. What would the strategy be that you would suggest here?
Yeah, I would suggest to hold, even though it's a slightly out of the money call, but the stock is still looking very strong, because in the last 4 or 5 trading sessions there have been 3 gaps which have been created for Reliance Industries. So what ideally you should be doing is keep the third or the latest gap as a stop loss for the trade. I think that's approximately at 2,395 or 2,390 to be precise for Reliance Industries on spot level. So I would suggest you can hold on to the option over here. If the gap is not filled, then I believe that the stronger case that Reliance Industries can make a bounce back, and it can even cross about those 2,500 plus levels. So would suggest a hold. 2390 on spot levels should be a stop loss for this option.
All right, this one is coming in from Sagar. He wants a technical view on IRB Infra. He's bought about 8,000 shares at 101 rupees per share for a swing trade. Do you think the stock has the potential to reach its old highs of 300 rupees in a medium term? What's your take, Kunal? Do you think the IRB Infra can retouch 300 in medium term?
I think there are times when we look at price pattern breakouts, and when we assume that probably the stock has confirmed breakouts on some time scale charts. But the concern with IRB Infra is that even though the stock has confirmed a breakout, the volumes have been lacking for IRB Infra. So it's not as if that the volumes are very similar to what the stock has seen in 2013-14, when the stock had gone through a rip-roaring rally. The breakout for IRB Infra, for example, happened in the month of June 2021. Where the stock rose up from 100 to 170 in a matter of 1 month. But post that, the stock has gone through a drift on the upside, and the volumes have dropped significantly for IRB Infra. So that's the point of concern for the stock. Lack of volumes is not typically a good sign when you're looking to try and trade and look at swing trades into these names. So you can hold on to the stock, but have a trailing stop loss. I think closer to 160 or 158 would be a good trailing stop loss for IRB Infra.
Rajesh, coming to you on this next one, we've got Girish Prajapati from Surat, who's bought Shree Cement at an attractive price of 26,416, wondering whether to book profits or maybe partial profits. What would you say?
Is it for me, Alex?
Yes, Rajesh, for you.
Yeah. Shree Cement is a very strong play in cement sector as such, and the entire cement pack is going to do well. I would say if you are not in a hurry for any funds, stay put with the stock. although it's showing some kind of pressure in the recent past, but I think it's has a lot of space left in the upside. So one can continue to hold, and if somebody wants to buy new or be in cement sector, one can even have a look at Ultratech.
Okay, this one is from Marshall Fernandez from Kerala. He's a long-term investor. He has 50 shares of Alkyl Amines, which he's bought at 4,271 rupees per share. He wants a fundamental view on this counter so that he can look to buy at current market price, or rather he wants to know whether he can buy some more at current market price. What's your take, Rajesh? How does Alkyl Amines look like for someone who's a long-term investor? Does it make sense to stay put with this counter and add some more at current market price as well?
After the China fiasco, the entire chemical space has been doing well, and we think that it's going to do well at least in the next 1 or 2 years or so, if not more. So Alkyl Amines is one of the good companies, but adding more at this point of time would be a little risky. One can have a look at Balaji Amines, that's doing very well with the expansion plans and all. And the valuations are rather in a better spot than Alkyl Amines. So if somebody is holding, one can carry on holding, but any new money to be deployed, one can consider Balaji Amines.
All right, I do want to point out to the viewers that while our experts have a wide array of stocks that they can comment on, generally, if the stock has very, very low volumes, is incredibly low on market capitalization, or is a penny stock, please do avoid asking those questions because it becomes very hard to get an answer. The next one is from Padma. She's asking whether she should sell her holdings, and again, I do not have a buy price, so Kunal, it might be a little bit difficult to answer. MMTC, Indian Bank, Bombay Dyeing are the counters that she holds. She's asking if she should invest in SAIL at the current price by selling those holdings.
I think it should be a good strategy where you can look to exit. The reason I believe that many of these stocks like MMTC, Indian Bank, etc., I think they've gone through a bit of a drag. They've been, the inability of these stocks to lift off any kind of trend in the last 5-6 months, I think has been a big concern for the overall space as such. SAIL on the other hand, I think has shown its mettle. The stock has done phenomenally well. The theme of commodities and metals as well is quite roaring. So I believe in that sense you can look to invest in SAIL by exiting these stocks. And I would also want to probably reiterate the fact that the real estate space is also very, very attractive. So if you want to try and chip into this space as well at current levels, it could turn out to be a very good strategy from a longer term play.
Okay, this one is coming from Aditya Kulkarni. 78 shares of Thirumalai Chemicals is what he purchased at 209 rupees per share. He wants to know whether it will hit 240 levels anytime soon. What's your take, Kunal? Thirumalai Chemicals, how does the chart look? Do you see a further run up for this counter?
Well, as of now, the stock is consolidating. So, the rally which started off for Thirumalai Chemicals in the month of August, where it moved up from 160, 165 to almost 210 in a matter of 4 or 5 trading sessions, that I think is getting cooled off and sort of reversed for itself. And the worry for the stock is that the downward drift and the sudden lack of volumes for Thirumalai Chemicals, where the stock has just drifted from 210 to 193 without any major signs of price reversal. So that's a bit of a concern when we look at charts. So I would sense that maybe the stock can go through one more round of correction, can come back to 170, 175, and then probably post that once the indicators come oversold is where you should see a reversal. So as of now, I would sense that from a short-term basis, the stock can drift a bit lower from current levels.
Okay, I'm going to take this question to you, Rajesh. If you have a view, please do answer. Dasharath has got a question on the fundamentals of Vivimed Labs. Would you suggest a fresh entry at this price?
No, I would not suggest. It's already run up quite a lot, and the volumes are very low. It's better to be in a better niche, maybe in a pharma. You can have a look at Ipca or a Glenmark. That would be a better choice at this point of time.
Okay, this one is from Riju George. Riju, I know that you've also posted your query on WhatsApp as well. I'm taking the one that you posted on YouTube. He has 100 shares of Redington India, which he's purchased at an average price of 158 rupees per share. He wants to know whether it's a hold or a sell. He's saying prices have been crashing since the bonus issue, and should I add more to average at this juncture? What's your take, Kunal, for Redington India? 158 is the average price that Riju has actually bought this counter. What should he do now?
I think right now the stock is going through a correction phase. It's also reversed. It's major swing support. I think 140, 144 was the 50-day moving average for Redington India. The stock has broken that support as well, and it's drifting lower. Fourth straight week of correction for the stock. And I would sense that the stock can go through maybe another 20 rupees on the downside as a corrective phase. The 200-day moving average for Redington is at 106 or 107. So there should be a scope where the 200-day moving average and the prices can coincide approximately at the 110, 115 level. So I would suggest that if you're looking to hold on and if you're looking to average, then 115 could be an entry point where you're looking to average. Or if you are looking to exit the stock at current levels, then you can exit and look to re-enter once the stock comes back into this territory of 110 to 115 zone.
Okay, this is an interesting question in terms of strategy. We've got Rajiv who's asking, Rajesh, this one's for you. Would you buy IRCTC now or after the split? And what are the fundamental views that you have on the counter?
Fundamentally, we are very bullish, and let me tell you, Alex, we have been recommending this stock since 900 odd rupees after its listing, and we are still very bullish after this kind of run up. But there might be some amount of profit booking because it has run up quite a lot in the recent past, maybe last 1 week or so. But for a longer term horizon, all the verticals are doing well. Almost 9 lakh tickets are being booked every day. That's almost at the pre-corona stage. And once the entire lockdown is open, I think this stock is going to cross 3,700 odd rupees in the very near future. So one should stick to the stock. And as far as strategy for buying now or after the split is concerned, I don't think there's much of a difference. But after the split, the price will be divided by 5 and 10, 20 rupees there and there. So it doesn't make much of a difference.
From Purna Chandramani, she's saying bought Polyplex Corporation at 1,550 rupees per share, 65 shares she's purchased. Can I hold it for a long term? Is it a good stock or not? What's your take, Rajesh? Polyplex Corporation, good stock. Purna can hold on to it?
Yes, of course. The company is doing very well. Every year they are doling out good amount of dividend. The Thailand subsidiary is doing well. And we have a initiating coverage report in this company from the levels of 900 odd rupees. I think very soon the stock can move up to 2,000 odd levels. Sometimes back there was news in the media that the promoters are trying to sell their stake and some new investors might chip in. If that news comes in, I think that would be a bigger trigger.
Okay. Rajesh, do you have a view on Pokarna? If you do, we've got a viewer from Hyderabad, Venkataraman, who has bought at levels of 400. Would you suggest that he hold on?
See, I would not suggest this as a long-term story because we have seen in the past also that this stock, when it goes into consolidation, it stays there for years together. So it's better to switch from Pokarna to a better names or a better managed companies. Maybe a Graphite India would be a better place.
Okay, this one is from Sri Kutan, wants to know, can we initiate fresh positions in Airtel from current levels? What's your take, Kunal? Makes sense to start nibbling into Airtel at current levels?
Well, yeah, I think you should start nibbling into it and use dips to your advantage as a good averaging opportunity. The stock has confirmed breakout. We've discussed this so many times on the channel, on Chartbusters as well as on this show as well, that how the stock has confirmed breakouts of multi-year, multi-month time scale resistances, and I think whenever that has happened, it's resulted into breakouts which lasts for at least 1 to 2 years, if not more, for stocks. So I believe that in that sense, you should look to enter the stock at current levels and use correction. At least a 5% correction from your entry point should be a good averaging opportunity for Bharti Airtel.
Okay, I believe Vijay Lakshmi has been asking this question for a while. I'm going to take it to you, Kunal. Technical view on Engineers India. Bought 300 shares quite a while back at levels of 95, but asking whether Vijay Lakshmi can get back the cost price and whether to hold or add more at this juncture.
I would suggest an exit. The stock has confirmed crossovers on the downside, 50 DMA crossing over the 200 moving average. We typically call it as the death crossover for stocks, and that doesn't augur very well. So I would suggest a sell on rallies. The stock apparently has bounced off from 65 levels to 72, 74, where it's trading currently right now. So I think these are the kind of rallies and bounces which you should be using to try and offload the stocks and look to exit.
This one is from Chaitanya Kovila. He's saying that he wants a view on Relaxo footwear. He wants to know, does it get benefited from the incentive scheme extension on footwear industry? He also wants to know whether he can enter the stock at this current juncture and hold for the longer term. What's your take, Rajesh, on Relaxo footwear? Will benefit from the schemes that the government is rolling out for the industry, and good to hold on for the longer term?
Yeah, I don't find any reason to believe that why one should buy in likes of Relaxo, because the numbers are not that kind which justify the kind of valuation or the run-up it has every now and then in the stock. It's a better in a trading perspective, but for investment, I think if somebody wants to be in footwear, the only Bata would be a preferred choice. If somebody can hold for a very long period of time and with low volume stocks, Real Leathers or Khadim would be better than Relaxo.
All right. It also goes down to preference of what you wear, right? Anyway, on that note, let's hit the rapid fire segment. We've got a question coming in from Megha from Bangalore. 100 shares of Laurus Laboratories at 280 per share. Would you hold or would you sell at the current level? This one's for you, Kunal. What would you suggest?
Well, I would suggest a hold, and if possible, look for 5% corrections as good averaging opportunity.
This one is from Muthu Palani. Wants a view on City Union Bank for the longer term. Already has 700 shares which he's purchased at 150 rupees per share. What do you say, Rajesh? Does it make sense to stay put with City Union?
We have a recommendation on the stuff. If somebody has got funds, one can even add to that.
Okay, Tejas Singh is asking whether he should book loss or average bailout, BHEL out at the current level. 70 is the price that he bought it at. Kunal?
I think you should look to, you can look to hold on, but just keep a stop loss around this 50 mark. This was the level which the stock had hit, when it touched the 200 moving average. So keep a stop loss of 50 and hold.
Manas Gore wants to know that is Tata Power, or rather Torrent Power, worth buying for short to medium term? What's your take on Torrent Power, Kunal?
Being bullish on the stock should be part of your short term as well as medium term portfolio.
Satyan from Palakkad is asking about Apollo Tyres. Bought 50 shares at levels of 248. Can it be held for 3 years? Should it be accumulated? This one's for you, Rajesh.
One can hold, no doubt, but if you want to buy new or accumulate, put more funds, CEAT would be a better choice, or even Balkrishna Industries.
Manjunath is holding 60 shares of Chemcon Speciality at 435 rupees since October last year. Can I accumulate at present level for 1 more year? What's your take, Kunal? Chemcon Speciality, can she look to accumulate?
Well, I would suggest an avoid. There are much better quality stocks available. Avoid of this space. I would suggest an avoid on Chemcon.
Alright, on that note, we're out of time on the rapid fire segment as well as on the query segment. It's been an absolute pleasure speaking to the both of you, Kunal as well as Rajesh. Thank you so much for answering all the questions that you did answer. To all those of you who've written in and didn't get your queries answered today, apologies for that, and I hope that you benefited from the answers that the experts gave for the other questions. Do tune in tomorrow though. We'll take a lot more queries when we start the rapid fire segment. On that note, we're slipping into a short break. More on the other side, so do stay tuned.